For those of you guys who are currency traders, I want to talk about something really tempting that comes along in the Forex market. For years, when I first got started trading, I traded stocks and then I meandered over into foreign exchange as well. And I now trade a little bit of everything. But one thing that I remember is that there was this fascination, this idea that I really wanted to buy charts that looked like this because things start to look oversold. Right? But as time went on, I learned two important things that changed everything for me in my trading. Now, again, I mentioned that I trade a lot of different things. I mostly trade indices and commodities, but I still trade a little bit of Forex. And when I do so, there's something that you have to understand. The fundamentals that I'm going to show you when I move this little camera that I'm on are going to show you why you have to be careful looking at charts like that and wanting to just get bullish. So I'm going to move this over here and then I'm going to go ahead and make myself a little bit smaller. And then what I want you to notice is that there's a whole lot of red. And when I tell you, when you actually understand, if you're newer to fundamentals, when I explain what we're looking at here together, it might change your perspective a little bit on wanting to buy charts that are in free fall and sell charts that are like a launching, rocket ship into the air. But before I break this part down, let me show you something interesting. So the first thing I was going to mention was fundamental analysis, but then I said I wanted to show you this chart. This is also really important, and it changed my perspective massively. For those of you, again, who are specifically trading Forex, this is relevant to everybody, gold traders, indices traders, etc. But specifically Forex, look at what we have in front of us. This is a tool in the EdgeFinder that is regularly overlooked by a lot of our users. We have thousands of users who use our software all the time, but this one gets a little bit overlooked, but it shouldn't be. It's actually really important. This is the retail sentiment indicator, and if Chandler, you could help us with the zoom here, you can see it's under the sentiment and positioning tab. If you are an EdgeFinder user already, I highly recommend that you pause this video and go check this out for yourself. We're looking at the overall sentiment here of positions held by retail traders specifically on the major US dollar currency crosses. And when we just looked at that chart of the euro dollar in free fall, and when we look at the pound dollar, which is also in free fall, and the Australian dollar, everything's getting beat up by the dollar, what do we notice about what retail traders are doing? Just like how I told you, I was feeling the temptation in my early trading days when I got into Forex to want to buy charts like that, buy charts that are free fall, sell charts that are ripping higher. That is the common retail trader approach, to buy free falling charts and to sell ones that are up. And if you don't believe me, let's go look at dollar CAD on the daily chart, which retail traders are heavily short on and have been for a while. There it is. The thing is screaming to the upside. Dollar CAD is up, up, and away. So my point with showing you this is that it is very common to want to feel like you can go against the trend and be a hero in the financial markets. But I unlocked some serious improvements in my trading when I realized you don't need to be a hero. You don't need to be the wise guy on Twitter who's telling everybody, I'm short on this thing when everybody else is, clearly long. Like, you got to be careful with that stuff. It's okay to think something may be starting to get oversold or overbought, but don't jump to the conclusion that it's going to instantly reverse. And fighting trends is just a difficult thing, long story short. Now, we're going to go back and talk about the fundamentals, the PMI data today, but let me give you a very quick sales pitch. The software that I'm using to show you some of this key data, the EdgeFinder, is something that is a one-time payment to get access to. And the reason I bring it up specifically today is understanding some of these data clues that you can find through things like retail sentiment or the commitment of traders data or economic data, better understanding PMIs like we're about to go through. Understanding data at a more comprehensive level can save you thousands upon thousands of dollars and maybe more. Having the right tools in front of you, trading with insights in front of you at the tips of your fingers with the EdgeFinder can change everything. Understanding some of these breakthroughs that you can dive through in data can make a world of a difference for traders. The EdgeFinder allows you to tap into tons of market data in a singular platform, and it is currently, right now, 40% off. There's a link down below in the description to sign up if you want to get access to our data. And yes, like I said, it's a sales pitch, but it's a remarkable software that we work really hard to make it as good as it is. And it is our biggest discount of the year. So if you're a regular viewer of my channel, I want to encourage you, take advantage of the Black Friday sale. It's the lowest price of the entire year. And now that my sales pitch is out of the way, I appreciate you taking the time to listen to me on that. If you don't want to pick up the copy of our software, I totally understand, but consider it. It is really a remarkable tool and can make a huge difference, as it has for many thousands of traders all over the world using our premium tools. So going back to this data, now that we've just discussed this, PMI data across the board here this morning for Europe was weak. So when we talk about why is the euro selling off, why is the pound so weak against the dollar? Well, it's because the dollar looks relatively upbeat. We had flash services PMI come out for the US. Let me move my camera just a little bit more. There we go. So US data came in and PMIs were better than expected and as expected for manufacturing PMIs. So US data was pretty solid. Then you got Europe. Let's take a look at the UK first. UK PMIs both missed expectations and both were below 50. Remember that below 50 is considered contraction for PMIs and above 50 is considered expansion. So we've got expansion over in the US and we've got mass contraction across the board for European PMIs. So my point with showing you this is that when you look at the euro, you say, am I getting a good deal? Well, ask yourself, maybe more importantly, what do the fundamentals look like? Is the euro actually getting more valuable compared to other currencies? And this would give you evidence that maybe no, maybe the euro is seeing their economy contract. Do you want to buy the economies of weakening places or strengthening ones? That's why the dollar is killing it right now. And that's why when you see charts that are in free fall, the retail trading mind that I once had tells me, oh, I got to go buy this because it's low. But something low does not mean value. Prices can go down, and that does not mean that the thing got cheaper. In fact, it could get much cheaper than where it currently is if some of those fundamental flows or trends continue. Not to mention, retail sales out of the UK were also weak, and they revised the previous number lower. I mean, just a weak report across the board for European data this morning. Take a look at the pound dollar, which looks incredibly ugly. Massive sell-off here recently, and again, not something that I can justify saying, oh, now's the time to buy it. We don't see economic data prints showing upbeat, showing, a rise for the pound. In fact, this could continue for months to come in the future. I'm not saying it will, but right now, with the data set that we have in front of us, I'm more bearish on these things than I am bullish. And it should also come as no surprise that following this weaker economic data out of Europe, that gold's price actually continued to push up. And this is why, if you listen to my videos recently, I've mentioned that on a price action basis, the gold market looked a little bit weak to me. But this is why I don't look solely at technicals, because the fundamentals are telling me trying to short gold here is tricky because we have a lot of weak economic data coming out of Europe. And in fact, that sort of propels gold higher. So I'm very neutral on gold currently because yes, some of the economic data out of Europe is looking a little bit weak, but the US seems to be holding strong. And, with the election behind us, some of that uncertainty is now behind us. So I just see gold as very much a neutral rating right now. But thank goodness that I was paying attention to the fundamentals, because otherwise I probably would have shorted gold if I was only looking at the technicals. During today's live stream, I had a conversation with Kinzo, who comes on every Friday. We discussed a little bit about the indices right now. Check out this clip to see our thoughts on things like the NASDAQ, the S&P, and the Dow Jones. What are your thoughts right now on indices?
Yes, I was focusing actually on NASDAQ and US 30, and they seem to be performing very well. But this week, I think US 30 was performing very great, especially from NVIDIA. It performed very good, but I think we did not really see the overall push because I was expecting a bigger move. But I think maybe today we might close the market higher. It's better than a few weeks ago.
Yeah, it's been interesting just to see the even though you've had some ugly news mixed in there, right? The uncertainty about what's happening in Ukraine, despite some of that shaking up the markets, it doesn't seem like it had enough to really keep things down. The other bad news event that happened this week, at least in the eyes of the market, was the uncertainty around Google, right? The Department of Justice talking about them needing to sell off Chrome, and perhaps that shakes things up a little bit for big tech stocks, because of course those sorts of rulings can hurt their business models to a degree. So I don't know, some uncertainty on that front as well. But do you think that overall, going into 2025, do you think it's something where we see this ramp up into the end of the year, and then 2025 we see corrections, pullbacks, periods of consolidation? Or do you think it could just be strong and then strong again in 2025? Do you see any sort of cool down in the coming weeks or months?
For now, I don't really see that. I think the overall push coming from now, I think we are going to see some overall push to the upside. But I think similar to what we saw from 2020, 2021, especially because Trump is going to be in the office. If maybe he can try maybe to cool off some of the geopolitics or tensions, I think everyone from those countries, they will be focusing on stocks. Obviously, I think we will see businesses or companies performing very well. Yeah, unfortunately, from Google, they have this issues or fines from DOJ, but I think it happens like almost every month from these tech companies. Last month, I think it was April, they have to pay 10 billion, but in Europe. So it seems like they have all these issues, but at the end of the day, that if they fine them, I think it's going to be a smaller amount, maybe 2 billion, 10 billion. So that is actually nothing for them. So, but the
Yeah.
overall push, I see a quite bigger move. I think the market is happy.
Yeah, and I know another one is there was some news that Amazon might be getting some pushback from Europe, and just in terms of some restrictions. I'm not exactly sure on it, but let's see if we can find anything on that. Yeah, EU's Digital Markets Act next year. Amazon potentially likely investigation. So I don't know. You always sort of have this little bit of pushback from governments, not just in the U.S. but in places like Europe, etc. So it seems to always be a bit of a story. But as you mentioned, maybe not a huge deal for these companies, which have so much money, they can sort of just pay off these events, get past them, and continue to do business and make tremendously more money. So really an interesting story on the stock world, especially those mega cap, ginormous companies like Apple, Amazon, etc. Another question for you, Kenzo, is what about gold? Gold has kind of fallen out of its just straight upward trend that we've seen for most of the year in recent weeks following the presidential election decision. We had a decisive win, and typically an indecisive win is more unnerving for investors, but a decisive win makes people feel like, okay, at least we know what we're dealing with. We know, okay, it's going to be Trump, it's going to be a Republican Congress majority, and a lot of that is going to be put into place. At least we know that is going to happen. It's not we have a mixed sentiment of who's going to actually win the election, or there's no claims to the election, etc. There was a clear winner. That uncertainty getting washed away helped to push gold down, actually. But now gold is ticking back up. We've seen the uncertainties in the Eastern European theater, right, with Ukraine and Russia, some threats of nuclear warfare, which is always scary, not only from a markets perspective, but just a general, humanitarian perspective. It is a little bit concerning. But is gold 2025, if you had to pick a direction, do you think gold is higher or lower in 2025 from where we are currently, around $2,700 an ounce?
Yeah, to me, I still believe it's going to go lower. For now, I think maybe whatever that is pushing gold to go up now, I can see the forecast. It's actually on the tensions, or let's say maybe Russia and Ukraine. Whatever that Biden approved, I think it's this week or last week, and also Britain and France, they actually approved some of the long range missiles and stuff like that. So obviously that creates panic, because it shows that the tensions are just going to go higher and higher. But I think this is just going to be now. Let's hope that they don't push much, but once Trump is in, I don't think we're going to see a continuation of this. So I think it's going to be like a year before we get Trump in the office. This 20 days, 50 days or whatever, they will feel like a very long time. So I just hope, if maybe it was possible, they can just put him now, then I think all this thing might disappear very quick, even if it's not really going to be in a day. But I think it's more on the peace side than what the current administration is doing at the moment, especially on their last term. I think they were just going to get out with peace, but it seems like they just want to mess things up for Trump, unfortunately.
Yeah, and who knows exactly what will happen within the next few weeks before Trump takes office. It's a pretty serious matter in terms of just that whole situation for Ukraine, but also for the rest of the world as they kind of watch from the sidelines. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.